Hey everybody, Trader Dave here. Just wanted to go through some of these charts that we've been looking at for trades for Wednesday, October 14th. Also give a little bit of an update as to what happened in the market today. The biotechs got absolutely hammered today. You can see the IBB, which is the iShares ETF for the NASDAQ biotech stocks. It went down over 3% alone today. The reason why that happened is that the Democratic debates are tonight, and there's a lot of discussions around limiting patent rights and also putting caps on the cost of certain prescription medications. And so that really hammered this sector. You can see that this sector is down almost at least 20 some odd percent. It got up there to a high of around 400. It's down around 300, so about 25%. Um, so that actually set up a very bearish pattern quite a ways back. Actually, right in here, this is very bearish right here. The break of these moving averages as well. With that being said, I actually don't step into things like political situations. I think that they're just too volatile and they're too unpredictable for me to get into. So as you can see, this is an Amgen cell. So what we do is we have a proprietary tradehackers.com algorithm that we run our stocks through. And then we take a look at it and see if it's worth getting into and take a look at fundamentals and other things to come up with our recommendations for what we invest in. So you can see Amgen, Baxter International, all these showing cells. Celgene, another biotech company, even healthcare provider companies like CVS Pharmacy are showing that. HCA Holdings Company for healthcare. And then the last one is Pfizer. So we're going to stay away from biotech. We also think that, as we said yesterday, that the market's going to be still bearish. We're selling into rallies. And so here's a couple of interesting things that actually showed up on our radar screen today. You can see the IWM here. This is the ETF that matches the Russell 2000. This is a pretty important ETF. We think that this actually leads the market in a lot of ways. There's a sell signal up in here that we got as of today. So we think that small to mid caps are going to be headed down a little bit more. We think this ETF will test at least this 107 level or this low that was down in here. And then if you also look, there's also a sell signal on the mid cap from the S&P. I think that's the mid cap 400. So that there's a sell signal on that. We think it will at least test this again, these levels that were at the beginning of October. And then here's an interesting one as well. There's a sell signal on this TNA, which is a 3 times ETF. A 3x ETF is a leveraged ETF. It resets the price every day, but this ETF in particular actually should get a return 3 times what the underlying ETF or index would. So if the Russell goes up 1%, the ETF should go up 1%. Or in this case, since this is a bull ETF, if it goes down 1%, this would go down 3%. So we see a lot of sell signals starting to show up here. And here's another one right here. This is a Ultra Pro QQQ. So this is actually on the NASDAQ 100. And this ETF itself, so this is showing us that not only we may be getting sell signals in the NASDAQ 100, I think a lot of this has to do with the biotechs, as it is anyway, but that's okay. Then we also got S&P Home Builders. They now have a sell signal. That also came up with Toll Brothers, which is a home builder. They have a sell signal as well. The XLV Healthcare Spider Fund, that shouldn't surprise anybody with the healthcare dump over the last few weeks as well. So that's kind of where the market snapshot is, what we're kind of looking to get into. And now let's take a look at what we were putting in for tomorrow's orders. And then one more here, U.S. home construction. There's a sell signal on this as well. You can see it's going to get squeezed right here in these moving averages, and it's going to bust down one way or the other. So it's either going to take out this top and then this top, or it's going to go down here and retest those lows in our opinion. So while I'm not going to play the biotech companies themselves, there's an interesting pattern that I saw set up, and I really like this one. It's on CVS. You can see that it's had a chance to pull back a little bit, and what I like about this is that if you're a Fibonacci junkie like I am, you can see that this pullback's pretty decent sized pullback. It's right into that 50% range from this swing high to this swing low. This is August 24th. I'm not really paying any attention to that. That's an anomaly. You could probably draw your line down there if you wanted, and then you can see even a bigger pullback. It's actually above the 61.8 and approaching the 78.6. So if you wanted, you could actually use that as a stop. If the stock goes above $107, you could get out of the short position or the option. But I'm looking at this thing to short. Actually, not short because it would require about $105,000 of margin, and I want to leverage my cash as much as possible. So I'm looking to get options, the $105 calls. I want to give it at least a month, so I'm going to look out to November 20th. And if you take a look at the current price for that, I'm going to try and get in around $4, maybe $4.20. They closed at 385, but that I don't know if that even traded today. It looks like the current bid ask, or maybe it traded earlier when it was up. It's about $4.30 by $4.50. So any rally tomorrow will hopefully get us filled around the 420 area, for maybe even 425. So it'll be, I wouldn't pay more than 425 for these things. November 20th, 105 puts. I want them to be a little bit in the money. That way the premium that we're paying is not that great on these things, especially with the VIX going down. And then the other pick that I really like is this one right here. So it's the opposite of TNA, which is TZA, and that's actually the 3X Bear Fund ETF. So this is if the market goes up 1%, this goes down 3%. So it's an inverse ETF. I actually like this with everything starting to cross over. You can see that this is their death cross to the upside. So this is the inverse ETF. I like this because you've got, it's not diverged down here on the MACD, but it's pretty flat. The stochastics here, that looks pretty flat. I mean, you do have a little bit of a lower low, but this is actually set up I like. So what I'm looking to do on that is to purchase calls on this. So it's kind of interesting that you want the market to go down, so this will go up. But the price for these are, I'm looking to get the November 6th, because you can see it doesn't take long for this thing to do something. That's like 5-6 trading days. So I'm looking for three weeks out. So an expiration around November 6th. If you want, you can actually go out a little bit more to the 13th. Actually, why don't we go ahead and do that? Let's go out to the 13th. Those options are trading around $3. So if the market goes up tomorrow, like you never know what it's going to do, right? Then you can get hopefully these things for around $3. I'm going to put my order in for around $3.10. So if we can get $3.10 and it goes back up to here, it should be worth about $9. So that's just intrinsic value alone. So I'm looking for hopefully a spike down, a pretty fast, quick spike down. October is usually not the best of months for the market, and that's what we're looking to do. So I'm looking to go bearish two different ways, one with an inverse ETF call on the TZA, and if you want, you can actually lower your cost. You can buy the 45s and sell the 50s that capture profits at 5 plus 5 if it goes above 50, which is fine. It will lower your costs a little bit. Let's see what that actually would lower them to. If you got the 45s for around 310 and you sold the 50s for a couple bucks, then you could probably get into this trade for around $1.25 debit, or if you've got 10 options, around $1,250 with a maximum gain of 5,000 and a maximum loss of the 1,250. So that actually might be a better way to go. And now that I'm thinking about it, that's probably the way I'm going to put it in there. That way I can leverage things a little bit better. And let me take a look real quick at CVS again and see if we can maybe do something around a spread to limit some of the risk here. You can see one thing I like about this as well is that this is actually just doing its death cross. So, you know, it's probably going to, well, we're going to bet that it's going to go down. So what we would do in this instance, as we talked about November 20th, we're looking to purchase the 105s around 4.25, and then we could sell the 100s even for around 2. So we could get into this spread for around a debit of 2.25, which is about close to half as much. Your profits are, of course, limited to the 5 points times the amount of contracts times 100. So each contract's worth 100 shares. So you're looking at a $2,200 spread turning into 5,000 if everything works out. So we're looking to hopefully double our money in one and triple our money in the other if everything works out that way. That's what we're looking to do, and we will update you if we get filled. Have a great night, and see you on the 14th of October. Happy trading.